You start off your newsletter with this whole idea around like the Fed announcing the tapering, and then what we're seeing in the futures perpetual funding rate. So walk us through this.
Do you mind if we start with the first chart? Like,
dude, we can start with whatever you want. This is your show now.
What we're looking at here is A, just some price levels, and then B, Bollinger Bands with the wick high time frame indicator over it. It just is looking for these volatility squeezes. So you're essentially looking at where price is getting compressed, and AKA where volatility slows down, and we're primed up for an expansion, because consolidation leads to expansion leads to consolidation. And so what we're looking at here is this indicator identifies when we're getting ready to have one of these squeezes. And then the bands these are Bollinger Bands. I think almost anybody who does TA is familiar with Bollinger Bands, but essentially they're looking at the standard deviation from price. And, by definition, when price is at the bottom of the bands, price is relatively low. When it's at the top, it's relatively high. And then, what we're looking at here is these previous 3 volatility squeezes. We had one in April, one at the bottom of summer, and then the third one in September. What I want to point out here is a couple things. A, the amount of exactly how much time they take to play out kind of varies. Like if you look in April, it took, a good week or 2 for that to play out, versus over the summer, it took about 4 or 5 days, right? And then the one in September took about a week. And then the other thing I wanted to point out was oftentimes these squeezes break out in one direction to grab liquidity from the breakout traders before going in the opposite way. And so if you look here, for example, in April, we broke out above the bands. So it looked like, oh, we're squeezing to the upside, right? Trapped all the traders that are looking to, trade that breakout. Market makers grab the liquidity, or whales grab the liquidity, and then we go the other direction. Same thing over summer. It would look like we were breaking out to the downside, grab that liquidity, and then we flip to the upside. And so right now we're sitting smack dab in the middle between both bands, at least at the time of writing. But that's just something to keep in mind if you're watching this moving forward.
When you start to look at how the underlying kind of fundamentals are looking, the first thing that you wrote about was that Bitcoin futures perpetual funding rate. How much, before you kind of go into what exactly that's telling us, how much do you look at like the price and things like Bollinger Bands, et cetera, being driven by these underlying fundamentals? Or do you think that there's some reverse element that people are actually reacting to price? Like, are they driving price or reacting to price, in your opinion, when you're actually looking at kind of like a macro analysis of Bitcoin?
Well, it's both. I mean, some people sit in like the, efficient market hypothesis, and they say everything's priced in. Then there's people like, I'm reading George Soros's book Alchemy of Finance right now, and he's talking about essentially, people aren't making decisions based off of what's best for them. They're making decisions off of what they perceive to be the best decision for them to make. And so, like, with that being said, I think, when we're talking about like news, I mean, people are just reacting to what they think is the appropriate reaction to the news, not necessarily what's the correct reaction to news. As far as the fundamentals go, I think are you like implying like on chain when you're saying fundamentals?
Correct.
Okay, cool. Yeah. I mean, so I look at it 2 ways. When we have we're talking about like supply and those kinds of things, like supply getting locked up, that those things, or supply, becoming liquid, those kinds of things tend to be leading indicators. But at the same time, price can affect, market participant behavior. If we start to see like prolonged downtrend, people that were previously really strong hodlers, they may, let's say someone bought in 5 months ago, right? And they've now become a long-term holder. They bought in now, they would be in June. And so they've held since June, they've held through the bottom of the bear, but they pretty much just experienced up only. And so then, let's say we start to reverse pretty heavily. Well, then, those what were previously long-term holders, they may say, oh, well, forget this, right? Like, okay, I'm out. And because they were just expecting, some major reversal off of the summer lows. And so what I'm trying to get at is just like, a lot of times on-chain is a leading indicator, but there are certain occasions where, fundamentals are affected by price. Or if you have news events too, you can see the reaction of that stuff in the data. So it's like, oftentimes I don't really look at news too much. I mean, I do watch news, like major headlines. I have like alerts on like Market Watch, but generally speaking, the way I kind of think through that is you can really get caught up in your biases around like news and it's one thing to keep up with the Bitcoin market, but then to try to like become a global macro, expert, like that's like, you're just not gonna be able to do that. And so what I look for is what are the market participants actually doing in reaction to the news? And then I kind of use that as a way to gauge like, okay, is the market completely changing behavior based off this news? Well, maybe that's something actually serious versus, we got China banning Bitcoin for the 20 millionth time. No one cares, right? And you can see that in the data. So I would say like, I tend to look at the data to gauge what the reaction is from the news or whatever.
I think that's a great way to kind of frame it as to how you look at it.